Imagine a world where computers can solve problems in minutes that would take today's supercomputers billions of years to crack. Sounds like science fiction, right? Well, quantum computing could turn that fantasy into reality. And the best part? There's one stock that might let you ride this wave of innovation all the way to the top. Hi! In today's video, we're going to explore one of the most exciting topics in tech, quantum computing, and why IBM might just be the top quantum computing stock to buy right now. Thank you for watching, and please subscribe to my channel, The Finance Abbey, for more updates and insights. If you have any questions, feel free to reach out. Let's dive into the video. The quantum revolution, a quick primer. First things first, what is quantum computing and why is everyone so hyped about it? Traditional computers process information using bits, which are either zeros or ones. But quantum computers, they use something called qubits. Without diving too deep into quantum mechanics, qubits can be in a state that's, well, somewhere between 0 and 1 at the same time. Think of it as Schrodinger's cat, but for computing. This seemingly strange ability allows quantum computers to perform calculations at speeds that traditional computers simply can't match. For example, Alphabet's Google announced a major milestone with its Willow quantum chip. This chip completed a calculation in just 5 minutes that would take the most powerful supercomputer on Earth 10 septillion years. Yes, that's a real number, 10 with 24 zeros. But here's the kicker. Despite this incredible achievement, no quantum computer has yet been able to outperform classical computers in real-world, commercially valuable applications. So, is quantum computing just a pipe dream? Or is it on the verge of transforming industries like healthcare, finance, and artificial intelligence? Let's find out. IBM, the pioneer of quantum computing. If you're looking to invest in the quantum computing revolution, IBM, yes, that IBM, is your safest bet. Why? Because IBM isn't just dipping its toes into quantum computing, it's leading the charge. IBM's journey in quantum computing started way back in 1998, when it built the world's first functional quantum computer. Since then, the company has been steadily improving its technology. In 2016, IBM made its quantum computer accessible through the IBM Cloud, allowing businesses and researchers to experiment with this groundbreaking tech. Fast forward to today, and IBM has unveiled Heron, its most powerful quantum computer yet. But they're not stopping there. By 2029, IBM plans to launch error-corrected quantum systems, one of the biggest hurdles to making quantum computing commercially viable. Plus, they're working on integrating quantum computers with traditional CPUs and GPUs to solve real-world problems more effectively. What's even more impressive is how IBM has managed to position itself as a leader in hybrid cloud computing and enterprise AI, thanks to its acquisition of Red Hat. This diversified strategy makes IBM a safer investment compared to pure-play quantum startups, which might not survive the long haul. The case for IBM as an investment. Now, you might be thinking, isn't quantum computing still decades away from being practical? And you'd be right. This isn't an overnight success story. But here's why IBM is worth considering. While many startups are laser-focused on quantum computing, IBM has the resources, expertise, and industry connections to weather the long development timeline. They've already built strong partnerships with businesses and governments, ensuring they'll have a seat at the table when quantum computing goes mainstream. For instance, IBM's massive enterprise customer base, some of which spans decades, gives it an edge. Even if quantum computing doesn't pan out as quickly as expected, IBM's other ventures, like AI and hybrid cloud, keep it financially stable and well-positioned for growth. Essentially, you're getting a low-risk way to bet on a high-risk, high-reward industry. The long road ahead. That said, let's not sugarcoat it. Quantum computing is still in its infancy. While its potential is enormous, the technology faces significant challenges. It's been over 20 years since IBM built its first quantum computer, and we're still years, maybe even decades, away from widespread commercial adoption. But if any company can crack the code, it's IBM. Unlike smaller startups that could fade into obscurity without a breakthrough, IBM has the staying power to see this journey through. So if you're looking for a sure thing, quantum computing might not be it. yet. But if you're willing to play the long game, IBM offers a compelling opportunity to get in early on a potentially transformative technology. IBM, International Business Machines Corporation, is a well-established technology company with a long history of innovation and a global presence. While it is no longer the high-growth tech stock it once was, IBM can be an attractive investment for certain types of investors, particularly those seeking dividend income and exposure to enterprise technology services. Let's analyze IBM in detail. 1. Company overview. Ticker: IBM. Industry: technology, enterprise IT, cloud computing, AI, and consulting. Key businesses: hybrid cloud, focused on cloud computing and AI integration through its Red Hat acquisition and partnerships with other cloud providers. Consulting and IT services, provides enterprise IT solutions, including infrastructure modernization, data analytics, and digital transformation consulting. Mainframe and legacy systems, generates stable revenue from mainframe hardware and software, though this segment is in long-term decline. 2. Financial analysis. Recent financial performance. Revenue. IBM generates annual revenue of around $60 billion, but its growth has been relatively flat in recent years. Earnings. IBM's net income is stable, supported by strong recurring revenue streams. Dividends. IBM has a high dividend yield, currently around 4.7%, and is considered a reliable dividend-paying stock. It has consistently paid dividends for decades and is a favorite among income investors. Strengths: strong cash flow generation, which supports its dividend and ongoing investments. The company's focus on hybrid cloud via Red Hat and AI solutions offers growth opportunities in these high-demand segments. Long-term contracts and recurring revenue streams from large enterprise customers provide stability. Weaknesses: slow growth compared to other tech companies. IBM's revenue growth lags behind high-growth cloud providers like Microsoft, Azure, Amazon, AWS, and Google GCP. Dependence on legacy businesses, e.g. mainframes, that are in structural decline. Intense competition in the cloud and AI spaces from better capitalized and more innovative peers. 3. Key metrics. Here's how IBM stacks up as of recent data, December 2024. Dividend yield, 4.7%. P/E ratio, price to earnings, 15, which is relatively low, indicating it is a value stock. Debt to equity ratio. IBM carries significant debt, $50 billion in long-term debt. While manageable, this is worth monitoring. Growth rate. Revenue growth is modest, 1-3% annually, but strategic areas like hybrid cloud and AI are growing faster. 4. Strategic outlook. Opportunities. Hybrid cloud growth. The Red Hat acquisition has positioned IBM as a leader in the hybrid cloud space, which allows businesses to use a mix of private and public clouds. Hybrid cloud is a growing market and a key growth driver for IBM. AI and automation. IBM is leveraging AI and automation through its Watson platform and new initiatives like watsonx, an AI toolset. AI demand is booming, and IBM is trying to position itself as a leader in enterprise AI solutions. Spin-offs. In 2021, IBM spun off its legacy infrastructure management business into a separate company, Kyndryl KD, to focus more on cloud and AI. This strategic pivot allows IBM to streamline its business and invest in high-growth areas. Partnerships. IBM has partnered with major cloud providers like AWS, Azure, and Google Cloud to make its solutions compatible, ensuring it stays relevant in the competitive cloud market. Risks. Competition. IBM faces intense competition in cloud computing. Amazon, Microsoft, Google, Consulting, Accenture, Deloitte, and AI, NVIDIA, Microsoft, OpenAI. It lacks the explosive growth and market leadership of its competitors, which could limit investor enthusiasm. Debt burden. The company's high debt could limit its ability to invest aggressively in innovation or acquisitions. Execution challenges. IBM has historically struggled to execute on its strategic pivots. While the Red Hat acquisition was promising, its integration into the broader IBM ecosystem has been slow. Legacy dependency. While the company is transitioning away from legacy businesses, they still represent a large portion of revenue. Declines in these segments could weigh on overall performance. 5. IBM Stock Forecast. Short-term outlook, 2024 to 2025. IBM stock price is likely to remain range-bound unless it delivers significant growth in hybrid cloud or AI. Dividend investors may find it attractive in the near term due to its high yield and stable cash flow. Medium to long-term outlook, 2025 to 2030. IBM's focus on hybrid cloud and AI positions it to benefit from digital transformation trends. However, its growth will likely be slower compared to high-growth tech companies. If the company can demonstrate consistent revenue growth in cloud and AI, it could lead to modest stock appreciation. Dividends will likely remain a key part of IBM's appeal, as the company is committed to returning capital to shareholders. Price target, 12-month target, $145 to $160. Modest appreciation from current levels, driven by dividend yield and stable performance. Long-term potential, $170 to $200, assuming successful execution of cloud/AI strategies and revenue growth. 6. Is IBM a good investment? Why invest in IBM? Income focus. IBM is a great choice for dividend-focused investors, as it offers a high yield and reliable payouts. Defensive play. It's a relatively safe, low-volatility stock with stable cash flow and a strong customer base. Growth potential in hybrid cloud and AI. While not a high-growth stock, IBM's investments in cloud computing and AI could lead to steady long-term growth. Why avoid IBM? Lack of high growth. IBM is not ideal for investors seeking rapid capital appreciation. Competitors like Microsoft, Amazon, and NVIDIA offer much higher growth potential in similar spaces. Execution risk. The company's history of slow execution on new strategies could limit its upside. Conclusion. IBM can be a solid long-term investment for income-focused investors or those looking for exposure to cloud and AI without the volatility of high-growth tech stocks. However, it may not deliver significant capital appreciation compared to its high-growth peers. If you're focused on dividends and stability, IBM is a good choice. For higher growth potential, consider stocks like Microsoft, MSFT, Amazon, AMZN, or NVIDIA, NVDA. Let me know if you'd like further insights or comparisons. Smiling face with smiling eyes. Conclusion. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Finance Savvy for more insights into the world of finance and technology. Got questions or thoughts about quantum computing or IBM? Drop them in the comments. We'd be happy to help. See you in the next video.